What's up everybody? Welcome to the Stocks channel. My name is Corey and today in the stock market we see the S&P 500 closing at a brand new low with a daily close below the June low. Will this lead to further selling or is this dead cat ready to bounce? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today in SPY we were down 0.99% and SPY did close below the June low, which does invalidate our backtest that says the low was in from the June low. So I always suggest using recent price action and never getting sold on an idea, and that backtest has now officially failed. Going back 35 to 50 years, that backtest successfully called the bottom 100% of the time, but obviously 2022 failed the test and we are now breaking down. Now, bigger picture, there's still the possibility we could get a W-shaped bottom, which means we may not go too much lower and still put a bottom in this market. But as I always tell you, you need to respect the trend, and this is a downtrend until it's not, which means we need to continue looking for lower highs and lower lows until we break out of the downtrend. So as you can tell, now that we are breaking below the June lows, that does open the door for capitulation, which does mean SPY could go straight down to 350 without any bounce in sight, even though this dead cat is due for a bounce. You can see this is the second day in a row closing below the lower Bollinger Band, and we are getting extremely far away with the price action from all of our moving averages, and these oversold conditions will usually only stay oversold this drastically during a capitulation event. So you cannot rule out capitulation, and you do need to manage your risk right here around this zone around 365.86, which is the previous June closing low. Now, if we do start to get the dead cat because we are oversold and we are seeing volume dropping off, so there could be a little bit less selling pressure going into tomorrow, our number one level of interest is going to be that gap fill at 373.48, because that's also going to be the area the bears may show up, because that gap fill will instantly act as resistance. So in the event we do get a short-term bounce, there's still the possibility we get rejected and then possibly still hit the price target at 350 or even undercut it and continue to go lower. So this is still a very strong downtrend, so you need to respect the fact that downtrends are lower highs and lower lows. And if you're going against the trend, make sure you are using great risk management. Now, in the event this does turn into a W-shaped bottom, we need to see price action starting to break the downtrend, and the first sign of that is going to be price action making a higher low, followed by another higher high, and that will break the trend of lower highs and lower lows. And then we can start to say maybe the downtrend is starting to reverse, which means we will need to see SPY breaking that critical risk level at 390. So in the short term, you need to be prepared for any scenario, which includes the bounce from this zone and possibly ending the downtrend, or the capitulation and continuation of the downtrend that could send us to who knows how low, because we're going to follow the price action and it's currently a risk off market while we're below 390, and now we're getting risk off below the June lows. So even if you were taking on long risk, you need to continue to manage your risk as we break through these levels, or if you're shorting, you need to manage your risk above these levels. So make a trade plan for either scenario, whether we bounce off of the June lows, and do keep in mind the June intraday lows were down there around 362, so that's going to be the next likely target we could find support, and below that we'll be looking for 350. On the Nasdaq 100 triple Qs, we were down 0.41% today, and the triple Qs did also close very oversold, and we are still very far away from all of our moving averages and riding that lower Bollinger Band towards our price target at 267.5. As you can tell, the triple Qs did not close below the June low, which is sitting there right there at 271.36, and our price target does undercut the June low, which is at 267.50. Whether or not we reach that price target is to be determined, but it does look more likely with the S&P 500 breaking down, so we could see the tech sector just lagging behind, or this could be an indicator that risk on assets are not as bearish as people think, and we could find support at the June lows. Only time will tell. So continue to expect lower highs and lower lows while we're in the downtrend, and the critical resistance levels on the triple Qs will be 280 and 284, and we need to break all the way back above 293, which is our critical risk level, to snap the downtrend and possibly break out of our resistance trend line. So do keep that in mind. That level is still a ways away. If we reach our price target at 267.5 and continue to break down, the next price target, which is more than likely our capitulation target at this point, will be down there at 258. On the Dow Jones, we were down 1.06%, and the Dow Jones did undercut our price target, which is there at 293.5, which increases the likelihood the Dow Jones is trying to close that weekly gap at 285. I talked about this before and I told you gaps typically get filled, especially on the weekly chart, so it do not rule out the possibility that Dow Jones is trying to go down there to close that gap. To the upside, if we start to bounce, you're looking for resistance right around 299 and the gap fill at 300, and critical resistance will be up there at 305.8 and the critical risk level at 312, so there is a long ways away before we can snap out of this downtrend and start reversing it. On the Russell 2000 IWM ETF, we were down 1.88%, and the Russell 2000 did test the June low of support at 163.75, and as you can tell, we have not yet closed below that level. So as you can tell, a lot of the indices are showing risk-off behavior if we do start to break the June lows, and that is definitely something you want to pay attention to across the board, because below those levels, we will more than likely see a lot of stop losses hit, which is going to increase the selling pressure to the downside. Upside resistance will be 168, the gap close at 171, and resistance at 174.7, and the critical risk level at 178. On the ARK ETF, we were down 1.06%, and ARK is back down towards the support level, which is the June low at 36.5, and as you can tell, we are riding the lower Bollinger Band towards that level. Upside resistance will be $40, and the resistance trend line at 43. And if we break the June low, the next price target will be down there at 33.7. On the VIX, we were up 7.82% as the VIX gets a close back over 30 and right at our resistance trend line around 32. So as you can tell, we are seeing the VIX spiking into bear market territory, because anytime the VIX is above 30, that is an extremely volatile market. And I do want to remind you that volatility does work in both directions. So do not assume that shorting this market is free money, because if we see the VIX getting crushed in any magnitude, that could still lead to very sharp reversal counter trend rallies. The next bear breakout in the VIX will be above this zone around 33, and that could send the VIX all the way up there back to about 38. It's not getting bullish until the VIX crushes all the way back down below 24, which is a long ways away. On Bitcoin, we're currently up 1.54%, and Bitcoin is hanging in there like a champion right around this support zone at 19,000. So we are definitely seeing a divergence in some risk on assets like Bitcoin. Bitcoin's June low was all the way down there at 17,000, and we have not yet undercut that low, even though we are still teetering right on top of critical support, with the next leg lower being 17,000 and then 12,000. However, if this support does hold up and we can get that bull breakout back over 22,000, we may be able to say that crypto winter is ending and Bitcoin could be going back into a bull trend, but we will need the confirmation of the breakout above the resistance trend line. On Amazon stock, we were up 1.2% today as Amazon does hold that support zone at 115, and if that level fails, we'll be looking for the next leg lower at 106, and the upside is going to be the gap fill in resistance zone just below 126. On Microsoft stock, we were down 0.2% as Microsoft is continuing to close below the June low at 242. And as you can tell, the Bollinger Bands are expanding to allow Microsoft to get to the next price target at 231. Above 242, we can get more bullish for a retest of the critical resistance zone at 252. On Nvidia stock, we were down 2.3% as Nvidia continues to close below 129, which means we are in risk-off territory. But it does look possible that in the short term, Nvidia could bounce back up to close the gap at 142. Watch that resistance at 129 and 135, because if we start breaking above those levels, it's going to increase the chance we're going up there to close the gap. On Tesla stock, we were up 0.25% as Tesla did test the September low at 270, and so far there were buyers at that level. We have a gap to fill to the upside at 285.82, so that's a great upside price target with the 50 daily moving average of resistance right there at 288. The longer we spend down here, the more likely we could break down to go close the gap at 250.66. So on a break below 270, you will be looking for the gap close at 251 and possible support on the way there at 258.6. You can go long at 270 knowing that you need to set your risk on a break below that level, but do respect the fact that while we're below the 50 daily moving average, it is possible this is going to turn into a double top on a breakdown below 270. On Apple stock, we're up 0.23% as Apple is continuing to close below our resistance trend line, and we're back down at the support around 150. On a break below 150, our next support will be 147, and we can't get bullish until we can start closing back over 154 to about 156 and break out of the downtrend with the previous daily high up there at 157. On the financial sector, we were down 1.58% as the financials are taking out the July and the June lows, which are right there at 30.76, which is definitely telling us there's something going on with the banks and the financials are starting to break down. However, if you're going long, these could be great risk reward ratios for the gap fills to the upside but do keep in mind financials are in a downtrend. The industrials were down 1.05% as they continue to break that support at 85 and more than likely trying to close the gap just below 82. The healthcare sector was down 0.95%, continuing to break down below 125 and more than likely trending down towards support at 120. The energy sector was down 2.45% today, finally closing the gap at 69 and getting extremely oversold below the lower Bollinger Band with a huge gap to fill to the upside just above 75. Look for possible support around 67 with the potential to get a dead cat bounce up to fill the gap. So jumping back over to the S&P 500, while we did break the June lows, this is not time to panic because panicking is not a trade plan and that is not a strategy that's going to help you be a profitable trader. Manage your risk around the June lows, and whether you're shorting the market or going long, that is going to be your risk level. If you're shorting, manage your risk above the risk level, and if you're going long, manage your risk below the risk level, and make sure you do not go against the trend for any prolonged period amount of time if you are taking long trades, because this is a strong downtrend. Also, don't forget I still have 50% off your first month of bank trade alerts. All you need to do is apply the coupon code Labor Day, all one word, no spaces, at checkout to get 50% off your first month of bank. Bank sends you all of your buy and sell alerts directly via email and text message and only trades the ETFs TQQQ and SQQQ. If you're looking to become a better price action trader, consider joining the Stocks Channel Trading Discord community where you get access to all of my intraday updates and analysis. If you want to find out how to join Bank or the Stocks Channel Discord server, you can click on the links in the description of this video. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.